Hello traders, my name is Horvat and welcome to a new video update in which I will take a look on the euro dollar, gold, crude oil and S&P futures. Now on the euro dollar we will talk about, first let's take a look on this chart. We will talk about ending diagonal here on a daily chart, but it seems that new highs are in the cards here, which means we are looking higher in fifth wave, final leg of this ending diagonal. Because here we can see a sideways price action in very tight range, which appears to be corrective wave 4. Okay, I'm also tracking here idea of a triangle which is trying to find base here in this mid trend line of this base channel. As you know, this base channel, when it's taken out, like an example here, this is usually your confirmation that market is trading in wave 3, okay, of an impulsive structure, which means of a 5-wave rally. So after completed wave 3 you will typically see a sideways price action or a sharp pullback, which will be wave 4 that will find a support in one of those trend lines. Okay, so for now these trend lines are working very well, so I'm considering a scenario of a triangle here because I said of a sideways price action, and will be looking higher into wave 5 to new all-time highs in the next few sessions. Now let's take a look also on gold. On gold, firstly let's take a look on this monthly chart. We are bearish. We are looking for a 3-wave decline here. We already have 3 legs down, but we expect another 5th wave fall within wave C. Okay, here is the daily chart where we identified, if you remember, a 3-wave rally here completed because of this breakout through this lower trend line of this corrective channel. Since then we have seen running flat in wave 2, and market is trading very nicely lower for the last few weeks, but the most interesting price action is right now for me here, because on the 4-hour chart I can see only 3-wave rise. We know that 3-wave move represents a corrective price action. We have also seen a spike above former wave 4 and followed by a very sharp impulsive reversal to the downside. We already tested lower side of this corrective channel, so I suspect that this market is headed lower, especially if we also consider only a 3-wave rally here on the intraday basis. Okay, I can also see here bearish head and shoulders pattern. You can see left shoulder, head and the right shoulder, so it looks like the new lows will be seen here on crude oil. Critical level for this market remains at 1267, so as long as this high is in place, I of course will be looking for lower levels on metals. Okay, here we also have a larger head and shoulders pattern. Okay, it's presented on the line chart. This was left shoulder, head, right shoulder. We identified this breakout right here. Then we have seen a pullback very close to this neckline. So ideally this pullback was just a temporary, and that now we will see a strong move to the downside, maybe even towards this second projected zone, okay, which is actually distance of this head and shoulders measured from neckline to head, and then projected this distance from this breakout point. Okay, so definitely I'm looking for lower levels on gold and expect to see a break of these lows from June. Okay, and now let's take a look also on crude oil. Now on crude oil we are tracking this bearish wave count. Okay, we expect lower levels on the weekly chart in wave B. Okay, we are tracking this 3-wave decline, which is still incomplete. Ideally we are now moving lower in wave C, which is testing this trend line. So after this breakout for this trend line, the market could move very sharply to the downside. The reason why we are bearish is of course this daily chart where we can see lower lows and lower swing highs. Okay, it represents characteristics of a downtrend. In fact, I can count here nice extended wave 3, okay, with its 5 subwaves, followed by a very sharp rally in the past 2 weeks, which for me is represents only first leg of a minimum 3-wave recovery in wave 4. Okay, so I expect to see more sideways and even bullish price action for the near term. Okay, on the 4-hour chart, I can see very nice clean 5 waves here in wave A, and if you recall, in our past video we mentioned that we will be looking for a wave A top in this region and possibly a pullback back towards these previous swing highs of this wave 4, which was part of a downtrend, where broken swing highs will ideally react as a support in this wave B. So I still see lower levels here. As you know, wave B is also corrective leg, which means it must be subdivided by 3 legs. I think this is only first leg of a pullback wave B, and that we will see another push down to 1561.8% retracement area compared to this wave A. Okay, so I think that we will see deeper levels before market will then reverse to the upside into wave C of this wave 4. Okay, so as I said, I expect more sideways price action within this bullish recovery. Okay, and now let's take a look also on the S&P 500. On the S&P 500 we are bullish on the weekly chart, as you know, while on the daily chart we are tracking this red wave 5, final leg of a blue wave 3. Here's this blue wave 3. So we are still bullish, because of course we need 5 completed waves within this red wave 5. For now that's still not the case. This is wave 1, wave 2, and looks like that we are now making an extended wave 3 here, so expect to see wave 4 and wave 5. Simply we expect more strength here, because a pullback from the highs, I think it's still only in 3 legs. Okay, we have recently moved very close to 38.2% retracement, tested these former swing lows here from this consolidation, and now we can see some bullish price action coming in. So ideally this wave 4 is already finished, and it we will see push higher into wave 5 of 3. Here is the reason why I mentioned that wave 4 could be finished. Notice that I labeled these 3 waves down for wave A, 3 wave rally for wave B, and then 5 wave decline for wave C, to very close to this 38.2% retracement compared to wave 4, to wave 3. And very nice. And what about I like this about this market is definitely this sharp reversal from this low. This is clearly an impulsive price action. You can see that this rally lasted, I don't know, maybe this is the 4-hour chart, lasted 1, 2, 3 candlesticks, okay, which means 12 hours, while this pullback is already 7 candlesticks. Okay, now yes, 7. So it means that obviously this rally is much stronger than this current pullback. So I think this represents impulsive price action, while this pullback represents corrective price action. Ideally this is wave 2, part of this new 5-wave rally that will follow in wave 5, back towards new all-time highs on the S&P 500. But from a trading perspective and from minimum point of view, we of course expect a third leg to the upside, and so for the near term it's not important if this will be wave C or wave 3. In either case I think that we will see higher levels and a push above this swing high. Okay, so that's for the S&P 500 and the wave count. Here's also this interesting price action. You can see that here back in October we moved below this 50 period moving average, and then reversed and continued to the upside after this bullish engulfing pattern here. Okay, and actually it was also here a morning star, as you can see. But now we also have some very nice reversal candlestick. You can see that we have that the S&P 500 moved deeply below 50 period moving average, and then formed a very nice reversal candle here, which is also another indication that this S&P 500 will move to the upside. Okay, probably in this week. Tomorrow is also the FOMC press conference and statement, so it will be interesting how these price actions will unfold, but it looks like we may see lower US dollar against the euro, while the stocks could rally. Okay, traders, that's it for today, and I will catch you tomorrow with new updates. Have a good day.